Welcome back to the ETF Inspector. It's Saturday, November 15th, a little after 1 o'clock in the afternoon. And this is our week look ahead and payment guesstimate video for our YieldMax $1 Billion Club. Call it that because it's the 4 funds that are individual income funds that have $1 billion or more in assets under management, being CONY for Coinbase, Misti for what used to be MicroStrategy, now Strategy, Nvidi for NVIDIA, and TSLY for Tesla. A reminder, as always, I'm on X at ETF_Inspector1. Follow me on there. I'll let you know when videos are premiering. It comes out quicker than the notification from YouTube, but I do ask that you please still put the notification on because that tells YouTube you like the channel and it suggests it to more people and helps me maybe make a little bit more money. All right, before we get started, I always like to start with thank yous, and I'm trying to put the thank yous in the video series that the person gave on. So I used to always just put it on Ulti since that was the #1 viewer, but in this case, Starscream84 did a $5 super thanks and put it in the comments on the $1 Billion Club. So I am assuming that person is going to watch this series. So I want to make sure they hear their thank you, get their shout out, name up on the screen. So thank you very much for your generous giving. Starscream's always in the comments, though. I'm always talking back and forth. I think in the Ulti as well. So probably would have caught it either way. A couple other people gave yesterday as well, but it was in an Ulti video. So I'm going to save those thank yous for the Ulti video. All right, so let's go ahead and take a look. We'll bring up the spreadsheets. I'm going to try to, like one at a time, refer back to the charts. Hopefully I don't forget. So we start in alphabetical order with Coinbase and Coney. So over the past week, it was a rough week for most everybody. Coinbase dropped 11.9%. Coney was down 11.3%, so not quite as bad. And then when you consider they actually paid out a distribution in the middle of that, they actually outperformed the underlying pretty decently. But in any case, it was an ugly week. They are in that five-ish dollar range. And actually, I did not fully prepare the way I wanted to because there was an announcement made that we're looking at some reverse splits that were filed. I know a lot of people mentioned it. Here we go. We see 1 for 10 on Ulti and Murni, 1 for 5 on Ybit, TSLY, XYZY. So TSLY will affect this video. And then we got split adjusted trading, 1 for 10, Coney. Okay, so Coney, we are expecting a 1 for 10 split. Looks like the first section that's going to include Ulti and TSLY. Well, I guess we don't have to talk about Ulti in this video, but TSLY 1 for 5 around November 28th. And then we're looking at Coney 1 for 10 around December 1st. So split adjusted trading December 2nd. Okay, so we are estimating, all right, we're right in that, call it $5. I know it's $5.20, but we're looking at, if it would stay right where it is right now, it'd be a $52 share price on December 2nd. Obviously, we're going to have fluctuations between now and then, so it could be a little more or a little less. But we are expecting a 1 for 10 split. That, before you panic, that actually means nothing. Okay, so let's say you've got $10,000 in there, and just think of it as the amount of money you have invested in there. If you have $10,000 in Coney and they do a reverse split, you still have $10,000 invested in. You have $1,000, same thing. If the share price stayed at 5 and your $10,000 lost 1% of value because the share price dropped 1%, or if the share price was 50 and it lost 1%, you're still going to lose the exact same amount of money in the value of your investment. Likewise, if it went up 1% or any percentage, regardless of whether your share count is 1, 10, 50, 100, it doesn't matter. It's the percentage. So your money will move percentage-wise with the percentage that your holding moves. Okay, but what that does do is gets the share price out away from these these price ranges where some of these brokers will sometimes increase the margin maintenance or perform margin calls if they start getting a little nervous and prices get too low, which could have a very negative effect on you. So they are helping you out by doing this reverse split. It doesn't help them out any. It doesn't change anything for them at all. There's no benefit to YieldMax doing this reverse split. It does have a benefit to the investor if you are using margin. If you're not using margin and you're not, or if you're trading options on actually Coney, if you're not doing either of those, then it just has a negative effect. No, or not negative, zero effect on you either way. Okay. So we talked about Coney. We'll talk about reverse split again on TSLY. We can skip the middle. Hopefully I remember. All right, as far as trades are concerned for the week, they brought in 15 million on Monday. They lost 5 million on Tuesday, brought in 1.7 million on Wednesday, brought in 7 million on Thursday, and then brought in 4.6 million on Friday for a total of $24 million. If we divide that out by the outstanding shares that just got updated this morning, I did forget I downloaded the holdings on Saturday just to give you an idea. Well, here they are, but I'll show them to you in a second on the other page. I meant to show it on the other page, but that's where we get our most up-to-date outstanding shares. Divide that out, it'd be a 12-cent per share distribution. So I'm not saying that that's what they're going to pay. That is the maximum. That is how much they brought in. They earned 12 cents per share with the money on the investing week. Okay. Now, before we talk about this, here's where I wanted to show you kind of the difference. So when we download the holdings, it looks like this, and it's actually not even sorted the way I have it. I know this is TSLY compared to Coney, but they're all the same. And so what you'll see is you've got your synthetic, half of your synthetic, the put side of your synthetic is up here. The call side of your synthetic is down here. The sold calls are mashed in between, and the treasuries are in between as well. Not great to look at. Doesn't really feel like it tells you a great story. It just looks like junk. So I then take that and I make these spreadsheets, color the heading so it's easier for you to look at and see what we're talking about in each area. Synthetics, I pair together the call and the put. Get to show you how far in or out of the money they are, their value, what that would come out to per share. So these are kind of the added measure that I give you as opposed to just downloading the holdings and show it to you, because it'd be pretty boring to look at. But this helps you know, all right, these are our synthetics. This is basically like owning the shares up here, but because of concentration rules, they're not allowed to. That's why they are using synthetic combinations. You got all your treasuries, which we never really talk about. This is kind of like the collateral for all the shares. And then we got all the calls sold for the week ahead. All right, but let's go ahead and keep on talking about the distribution, since that's the part we were on. Backtrack, it was about 12 cents. It was exactly 12 cents that it would come out to. So then we take a look at a couple of other things. We look at what was the most recent payment, 8.3 cents, and that was a fairly high percentage. We take a look at the implied volatility. So here's where we give a free shout out to Market Chameleon. Hopefully one day they notice me and decide they want to sponsor some videos, but I use Market Chameleon to look up implied volatility on the funds. I do like to wait till Saturday morning to look everything up so that I know the full trading week has been able to, all the changes have been able to take effect in the update of the IV. So this is MSTR, but we just type each different one in. We looked up coins. It increased over the past week up to 67.7%. So that's going to help with your payout as well. And then we just are going to consider how the stock or the underlying and realistically the fund performed over the past week. Now that doesn't help. So 11% drop does not help us with paying out a nice high distribution. Increase in IV does. So we kind of take all that in, and then we also look at how is our synthetic doing, because if this has a lot of value, then we know down the road we're going to need to include that in the distributions, and we don't want to make it all in one, so we want to smooth it out. But in this case, it's very negative. The 390 for December 19th is looking at almost $200 million cost to close out, and the 310 is looking at a $43 million cost to close out. So that's going to detract from our payment because we know we've got big losses coming. So how do we want to end with that? So we take all that in. That's why I do call it a guesstimate, because this part, I like to deliver lots of facts and details and information, but this part is an opinion. And in this case, my guess is 10.8 cents per share. That would be a nice increase from the last one. What I did was paid 90% of the total earned income from the week. So that's my guesstimate. That would make it pretty high, 0.108. It would be over 100, so it would be 100%er. They do like giving those out. So we will see. Coney, my guesstimate for 11/19's announcement is 10.8 cents per share. Okay, when we take a look, we already kind of talked about our synthetics. Assets under management, just over $1 billion, $1,047 million. So they can't take another big down day, or I'm going to have to rename this video series. People sold out of the fund on Friday, 275,000 shares, bringing the outstanding shares down to 201,150,000, which would make your NAV, which is just all the money divided by all the shares, 521. It's trading at 520, so trading at a 1 penny discount at close on Friday. They are selling 100% of their possible calls sold. That's just the combination of the total amount of synthetic positions, and then take how many sold calls there are divided by the total amount of synthetics. So they are at 100%. Calls for this week ahead are at 292.50, 297.50, 300, 302.50, 305, 307.50. This is a purchased call, and then one more sold call at 315. We've got all our quantities, thousands and 10,000s, right? And then our range is calls are sold anywhere from, call that 3% all the way up to 10.9% for the week ahead. So as the stock moves up, Coinbase, basically 1,000 contracts worth, which would be what's at 100,000 shares worth, would end up capped at the 292.50 mark, but that's only a small number compared to the, what's that, about 35, 36 plus thousand shares. And so as it goes on, you'd hit different levels. If it never reaches 292.50, then it's just all collected premium for free. If it runs past it, that's not a bad thing. We'd pay to close these out, but our share values would increase. All right. That is everything I've got for you to talk about on Coney. Next, we'll go to Misti. We'll start with trades. Take a look at the trading week. $297,000 credit on Monday, $7.6 million debit on Tuesday. Had a lot to do with closing out synthetics that were underwater. Wednesday, $5.9 million credit in options trading. Thursday, $31 million credit in options trading. But there's a caveat to that. They sold, so people bought into the fund, so they had to put that money to work. They added it into a synthetic, or that is already underwater, right? So that means they're going to buy calls at 270, which are pretty cheap since the share price is down around 200, and they're going to sell puts at 270. Well, that's ridiculous because they have a ton of intrinsic value, as you can see. So that brought in a lot of money, but they are instantly, way in the negative to the equal amount, really. So it was a $31 million credit on the day, but just understand what about 16 million of that was because of adding to the synthetic. But that does mean the other 15 million did come from selling lots of calls that brought in a lot of money. And then Friday, we got a $14 million credit, again, selling a ton more calls for the following week. So all in all, that was a $44 million credit on the options trading for the week. They're winning their trades. that's going to make sense, right? If you sell a call out of the money and then the share price drops, then none of your calls end up expiring in the money and they're all basically worthless. You got to keep all the money. So 44 million divided by the outstanding shares is 16.33 cents per share. All right, we're going to go over to the holding side of things. Last week they paid 16.2, so that's not far off from where we're already talking. We'll take a look. I already forgot to do it on the very next one. MSTR, very rough week, 19.5% drop. Misti, right along with them, 19.3% drop. Now, they did also pay out that 16-cent distribution, so had they not dropped 16 cents, that's another basically 2% upward on that share value, so it would have been about a down 17.3 compared to a down 19.5. So again, the YieldMax fund is outperforming on this downturn. It's underlying, but nobody wants to hear about how you're outperforming while you're down 17%. Okay, but these pretty sharp drops in share price, look, almost at $10 at the start of the week, all the way down to $8 at the end. So that does not help us with a 16-cent distribution. We take a look at our synthetics. Are we getting any help from those? Absolutely not. It's going to cost $179 million, $113 million, $191 million, and $336 million to close out these synthetics if they were to end now. Now, obviously, they expire anywhere from December 19th to January 16th. So we've got time. We need MSTR to take off. It's got to get back up in these share price ranges. That's $100 per share at some points. Synthetics are anywhere from $255, $270, and $300 as the strike prices. All right, so from all of that, we did see an increase when we checked Market Chameleon, big time. Remember, we had under 50% implied volatility not that long ago on MSTR. Now it's close to 80. So my guesstimate came out to be 14.7 cents. Now you might be a little frustrated and go, last payment was 16.20. They made 16.33. Why would they only pay 14? Well, I just showed you the share price dropped from almost 10 to 8 in one single week. So I don't think we're going to get a 100% paying week or 100% payer on a week where they dropped so much in share price and they have so much hanging over their head. But I could be wrong. I believe I took about 90% again of what they brought in, 90% of that 16.33, because they do need to maintain that paying out of 90% or more to not have the money get taxed. Now, that's not on a week-to-week basis. That'd be over the year, but still. Okay. When we look at our assets under management, $2.183 billion, so they're not in any type of danger of dropping out of the club. One thing to notice, though, with their single-digit share price, the portfolio managers seem to have a little bit more faith in this one because they were not on the list for reverse splits. All right. Not even for a 1 for 5, which will put them in that $40 range, which is very similar to where they were reversing the other ones up to. So, and they are bullish, as you can tell, because they're not selling 100% of the calls, only 52%. So in the event that this thing takes off and goes right back up, half of all these synthetics will be able to rise uncapped right along with MSTR's climb. The other half, we would have to start closing out as these calls went into the money. All right, so we already said the assets under management. People sold out of the fund on Friday after they got their distribution. 3,625,000 shares dropped off, bringing it to 272,125,000. NAV of 802 and closing trade at $8. So somebody's getting a 2-cent discount. When we look at where we sit for the week ahead, everything calls-wise are sold for Friday the 21st. And they have 2 10s, 2 15s, 2 20s, 2 25s, those are purchased calls, and 235s, those are purchased calls. I only highlight the sold calls or short calls, the ones that are generating income. The other side is just is the other side of a call spread, and they don't do a whole lot of that. As you can see, there's only 10,525 contracts purchased on calls, whereas what do you have, 38, 40, 50, 55, 56-ish thousand, maybe more contracts sold. So they're playing this one in a way where they think it's going to come back up. So that's why there's not quite as many. And what it also allows them to do is, if we get a nice update, they are able to just sell more calls and not have to buy to close things out, and just bring in income during the week without having to pay to close things out. That doesn't seem right. Yeah, I didn't think so. I never go over this number, but I just noticed that it was wrong. That's just the cost if we were just going to close out all the options. But why you wouldn't close out the options on the day you started them? Okay, we already talked about everything up here, so I think we are done with Misti and moving on to Nvidi. All right, Nvidi closing out some synthetics on Monday resulted in a $4 million debit. Closing out more synthetics, the full thing, on Tuesday resulted in a $39 million debit. $168,000 credit on Wednesday, not worth talking about. Thursday, $11 million. Now people put money into the fund, so they're selling more puts, buying more calls. Since the puts are in the money, that brings in a decent chunk. But there was a lot of winning options trades on the day as well. So that was $11.3 million credit, and a just about $9 million credit on Friday's closeout, because again, they're winning the majority of their trades. But that one ugly day where they closed out an entire synthetic 34,190 contracts made it a negative week overall. So negative 23 million. They're not going to send us all a bill for 20 cents a share, so that's not going to be the payment. All right, from there, forgot again, let's take a look at how the stocks performed. Now, these guys did not have the bad week that everybody else did. Now, I guess normally you would call a 2% drop in a week pretty bad, but when everything else was dropping 11 and 19%, we'll take a 2% drop. So NVIDIA did not get roughed up like the rest did, and NVDY performed even better, only down 1.78%. And don't forget, 14 cents of that, or almost 1% of it, is distribution. So they down probably just under 1% for the week. Not a bad week for NVIDIA comparatively to how rough it was for everything else. So last payment we look at $14.39. I haven't been showing you this, but you can go back on the website for each one. You've got YieldMaxETFs.com. You go to our ETFs, pick whichever one. We're on Nvidi here. You can scroll down and see all the recent distributions. Just don't forget, it was back right in that between September 10th and October 8th, where it switched over from weekly to monthly. So don't think that they went from 83 cents down to 10 cents or whatever. These are now weeklies. So 2 weeks ago, we got a big one, 31.86 cents. Last week, only 14 cents. So we're not having any kind of consistency to base off of. We did notice the implied volatility dropped last week to 51%. Last week's payment at $14.39. Our share price did drop, but not terribly. When we look at our synthetics, we have January 16th, 195s and 200, both underwater. Not horrible, but $10 million and $45 million to close out. They equate to a negative 10 and a negative 41 cent per share type of value. So IV's decreasing. Last payment 14 cents. We got a loss on the options trading for the week. What did we come up with on the guess? I actually still said 14.5 cents. It's tough. I don't know that I realistically think that they're going to pay more than last week, but I don't know. Uh, I think I actually came up with 15 the first time, and I lowered it to 14 and a half. So that's going to be my guess. We'll see what it is. I've been off before. So assets under management, 1.7 billion. No change in shares on Friday, 111,150,000. NAV of 1539 with the closing trade at 1541, just a couple pennies off. We take a look at our calls sold for the week ahead. We have 192.50s, 195s, 197.50s, and 200s, anywhere from 1.2% to 5.1% out of the money. They are selling 100% of the possible calls that they can. NVIDIA is going to announce earnings this week. So we are likely kind of surprised to see IV dropping already. We would expect to see it drop after earnings. But we could see some craziness, right? That's what earnings bring. So, and even if it does, that's okay, right? I would rather see NVIDIA announce good earnings, everything go up, and we have to pay to close out these calls. Everything goes up. That's a good problem to have. It would have been rough if they announced last week while the whole market was tanking. Even if they had good news, it probably would have got swallowed up in the red, in the negative sentiment. So maybe as we get past last week, hopefully they'll have good earnings to announce, and it will have a positive effect here. But they paid 14.39 cents per share last week, and this week, declaration day and earnings day for NVIDIA are the same. So you're going to usually, I don't know if they're a pre-market one. Most are usually the after hours. So we'll probably find out 7 o'clock in the morning pre-market what they're going to pay out in NVIDI, and then we'll find out how things are going to end for the week for us based off the earnings on, I guess that's a Wednesday evening. Okay, and finally, TSLY. All right, first time I didn't forget. TSLY, let's take a look at their stock chart. They also had a rough week down. TSLY down 7.4%. TSLY down 7.38, basically the same. The difference is they did pay a distribution, so they still had a better week than their underlying. Let's see, what they pay, like 9 cents? Yep, 9 points. So they paid more than 1%. Lost my chart. Paid more than 1%. So really they're more of a down 6.3% compared to Tesla's 6.4% or 7.4% drop. But in any case, that's not going to help us any with it going down. Trading wise, they brought in 653,000 on Monday, 9.3 million on Tuesday. Oh, hang on. On Wednesday and Thursday, and then on Friday. So they had no trades Monday and Tuesday. On Friday, they had already closed out and rolled most of it on Thursday. That's why that 9.3 million, that's all those buy to close. So they rolled most of their stuff to the following week on Thursday, but they had not sold 100% of their calls. So then on Friday, they were able to sell the rest without buying to close anything. Overall, it was a $16 million gain on the trading week, which comes out to 10.06 cents per share earned. That is just the total amount of money earned divided by the number of outstanding shares. So it's little over 10 cents. They paid 9.6 cents last week. Their implied volatility did drop this week to 51.2. So we got a share price drop, rough one, right? 7% drop in our share price. We paid 9.6 last week at a higher share price and a higher implied volatility, but we did earn income. So that comes into it. I believe I again went with a 90% of what they earned payout, which will be 9.05, not too far off from last week's payment. That's my guesstimate for the week ahead. Their synthetics, I forgot to mention that leading up to that too, but their synthetics are also in the negative. So we had multiple cases for why it would be lower than last week's payment, with one, just the earnings being the reason to be higher. So I'm going with a little lower. Synthetics are for January 16th at 450 and 470. They are currently going to cost $57 and $100 million to close out, or 36 and 63 cents to the negative. That's the impact they are having on the share price. There's 1.2 billion in assets under management. People sold out of the fund on Friday, 900,000 shares, bringing it to 159,325,000. The NAV at the close on Friday, $7.53, and trading at $7.53. So right on the money, which makes the most sense because it's literally just a collection of money divided by an amount of shares. So if it ever got out of hand, why wouldn't you buy money for less than what it costs? All right, when we look at the week ahead, as far as our options, we're fairly well spread out, selling calls at 412.50, 415, 417.50, 420, 422.50, 425, and 430, and then they're purchasing the other side of the call spreads to protect themselves. Those calls range anywhere from 2 to 6.3% out of the money, with Tesla at 404.35 on the close. I think that is everything. So we're going to find out how close I was on Wednesday the 19th. Until then, I will make daily videos just letting you know how they performed each day and if they made any trades. So I've got a dad joke for you. Before I do, just want to thank everybody again for all the support. Thank you for the likes, shares, comments, follows, feedback, everything like that. And I do just, sometimes people get in the comments and like, tell me why this, why should I that, this is terrible. Like, don't buy it. I'm not telling anybody they should buy any of these. I'm saying, hey, there's a lot of people that have a lot of money in these, and here's all the information I could collect and gather and organize and present to you. If these funds aren't for you, then don't buy them. They're not for everybody. So, okay, dad joke of the day. I asked the librarian if the library had books on paranoia. She whispered, "They're right behind you." Hopefully my whisper came through on the video. All right, go back to having a good weekend. I'll get some more week look ahead and guesstimate videos out tomorrow. Thank you, and catch you in the next video.